Good morning. Today is Wednesday, October 11th. The time right now is 11:27. And yesterday represents the first full day of trading for America because on Monday we have the Columbus Day holiday. The bond market wasn't open. So basically the market wasn't very active in terms of full force. So yesterday was the first full day of trading and the market did reacted, basically reversing a lot of different asset classes. We talk about equity markets. We can see the equity market actually rose yesterday, which basically reverses the Monday early morning in electronic trading. We can see the market reacted negatively to the downside on Monday morning in Asia. So when the market opens on Monday itself, the market actually recovered quite a fair bit. And then yesterday we see an extended recovery. In the Dow Jones, we can see the cash index went to 33,898.2, and this is already testing the previous swing high that we have here just last week, and that swing high was 33,893.7. So we can see that the market did not quite take out that level. It did take out the level marginally, but however, it did not close above. So this will be the first layer of testing. So if we can see the market close above this level, then perhaps we can see further extended rally in the equity markets, failing which I think the market will pull back. In the S&P 500, we see similar rally, and the rally we saw went up to a high as 4,385.5, which is in the S&P 500 cash index. This is basically trying to cover the gap left open here last week at 4,401.4. So we can see that this is a covering back of this gap here that we see, and after this gap is covered, there is that possibility market may retrace backwards. Okay, so today represents the first I would say the first news that we can get is probably the producer price index. Now this will be a prelude to tomorrow's CPI numbers. So a PPI number will give us a sense of where inflation is heading, and by there we can get an extended idea of where the Fed is going to react during the end October, early November FOMC meeting. The next FOMC meeting is going to be end of this month and the beginning of November. Most likely, I think they will hold, and I think the likelihood of a hike in interest rate will happen in December. Okay, 10 days before December, we're going to have the last FOMC. I think that's when they're going to move on interest rate by a quarter point to the upside. And over in the Nasdaq, we can see the cash index sees a market recovery into this pocket of prices at 15,137.6 to 15,245.2. So basically, this has been a level that I was mentioning previously. So the market actually went into this bracket of prices, and we get a bit of a reaction. So we can see the market has already done a three-wave. So if nothing else, the market may actually have a chance to actually pull back. So a lot depends on the outcome of the PPI numbers and, of course, tomorrow's CPI numbers. Okay. And over in Asia, we can see that the Hang Seng extended rally to 18,000 and marginally above that level, and currently is within this bracket of prices between 18,011 to 18,080 in the futures contract, and there is a good chance that this may be a hard cat going forward. Even if the market do take out this level, the next more formidable level to overcome will be 18,400 to 18,600 levels. Okay, over in the Nikkei 225. Let me take a look at the Nikkei. The Nikkei 225 did rally this morning, and the high traded at just under 32,000. There's scope for the market to actually advance a little bit more towards the 32,400 to 500 level. So this will be the level to watch going forward. If you're not already bought, this is a lousy price to buy. In fact, if you are somebody who's like to do swing trade, this level at 32,400 to 500 is actually a good level to reposition short going forward. Okay, just make sure you put your stop just above the 32,600 levels. And over in the dollar itself, we can see dollar continue to ease back. But right now, I think the dollar is coming towards a point whereby there is going to be some kind of demand coming in. That level is 105.34. You can see that this is the swing low that we saw previously. So although the market has already broken out of the rising channel, but immediately because it's so near to a swing low, there should be some kind of demand. So do watch out for a bounce in the dollars, technically speaking. If that's the case, then of course we could see principal currency pulling back. Now, euro versus the dollar has hit a high of 106.20, and this is just into this bracket of prices at 106.19 to 106.44. So I do believe there's going to be some kind of selling interest coming from here. So just nice. I think technically this should be a sell going forward, and yeah, just take your cue from there. Over in sterling, sterling is nowhere near where it should be, and I think topside has a little bit more room to go. Currently high is a 123.04. I think the market major resistance is likely to be centered around 124.45 to 124.45 levels. Okay, so do watch out for further, perhaps even a little bit more room to go up in the sterling before it meets some kind of serious resistance. Okay, over in the Aussie remains to trade within a bound. You can see prices has been trading within a very well-known boundary. The lower boundary is about 0.63. The upper boundary is about 0.65. So between these two boundaries, the market has about 200 points range for it to gyrate. Okay, so to say, I think the market, if it ever goes into 0.65, is a sell in my opinion. And dollar yen continue to ease off because we can see dollar has been coming under a lot of profit taking. So although that's been the case, we don't see any big move to the downside. I think the downside probably will be contained about 147.35 to 147.50 levels. So I don't think this is going to be the move that will cause a collapse in dollar yen yet. In fact, I think there's a good chance that it may actually bounce off the 147.5 levels, perhaps to even challenge the 150.16 high that we saw just 2 weeks ago. Okay. And over in crude oil, you can see crude oil continue to ease back, and we can see that the gap that we saw on market during Monday opening, this gap here remains unfilled. I think at some point you will have to fill this gap. So ideally, in an ideal situation, I would like to see a market pullback to fill this gap. The gap is between $83.30 to $84.65. So ideally, somewhere between these two prices, we can see some kind of a pullback here, and then before the market rallied into the $90 levels. Okay, and over in the gold market right now is fast approaching an area which I believe will see some kind of selling interest. The level will be at $1,867.20 to $1,879.80. So do watch out for some kind of reaction from this level. There's a good chance market will pull back again. There's a gap here that I think technically need to be filled. This gap was actually left open by the Monday opening from Friday's closing. So that level is $1,837.80 to $1,844.30. Ideal, we would like to see a pullback into this bracket of prices for us to buy, for the market to actually challenge the $1,880. That would be the ideal outcome going forward. And over in the silver do not have a gap. The market basically continue to rally higher. So the high so far traded is $22.02. Okay, so I think the market, because there's no gap, if there's going to be a pullback, it's going to be marginal, and before the market go and challenge $22.11 to $22.21. And over in Bitcoin, I think the Bitcoin has come off just as we are speaking. The low so far is 27, I think it's 27,050. Okay, so this level should hold. If not, then the market will go down to test the 26,000 levels. Let's see if we're going to get some kind of reaction. I have not covered Ethereum until yesterday, which I believe is also primed to go higher. So I do believe somewhere around 1,530 to 1,550 levels, which is where it is currently trading, should offer some kind of support for the market to at least try this high, this band of prices somewhere around the 1,628.5 to 1,640 level. So there is going to be some scope here for a quick trade, if you may. Okay, so this is all I have for you for today. In the meantime, you watch out for tonight's PPI numbers, and I come back to you tomorrow with another update. Bye bye.